Today we're going to answer a question many of you have asked. Should I invest my money or just save it? Well, the answer really depends on one key thing. How soon do you need the money? Stick with me because in the next few minutes we will break it down in simple terms with real life examples so you can make the best decision for your financial goals. If you are new here, my name is Parul and I make videos to promote financial literacy and explain how economic decisions affect our daily lives. So let's get started. Let's start with short-term goals. If you will need the money within the next 2 to 3 years, maybe for a down payment, a vacation, or even a wedding, then you're better off saving, not investing. That's because saving accounts, especially high yield ones, are safer and more predictable. As of now, some online banks are offering interest rates of around 3.5 to 4% guaranteed. Say you need 10,000 in 2 years. You put it in a high yield savings account with 4% interest. That's a guaranteed $408 in interest this year without any risk. Now, you might be thinking, why not invest that in an index fund instead? After all, they track the whole stock market and may provide higher return. Well, that's a good question. But even though index funds are diversified, markets are unpredictable in the short run. You don't want to risk losing money you know you will need soon. For example, if you put $10,000 in S&P 500 index fund in 2022, by the end of the year it was down 18%. So if you needed that money for a roof repair or for vacation, you wouldn't have it. Now let's talk about long-term goals like retirement, college for your kids, or building generational wealth. If you don't need the money for 10 to 15 years or more, then investing is almost always the smarter move. S&P 500 average return has been more than 10% annually over the long term, and in recent years it has been close to 15 to 20% annually. So yes, over time, diversified investments tend to outperform savings account by a high margin. So what should you exactly invest in? Well, a diversified portfolio across sectors like technology, healthcare, energy, etc. So then you can invest in different asset classes like stocks, bonds, real estate, index funds, or ETFs. And if you're new to this, look into something like a target date fund or a total market ETFs, like simple, low cost and diversified way. I made separate videos explaining each of these options, so make sure to check those out. I will put the link of those in the description. Now, speaking of real estate, it's a powerful long-term investment. Property values tend to rise over time, and there are tax advantages like mortgage interest deductions. But it's a big but. It comes with high upfront cost and it's not highly liquid. So you cannot easily access the money if you suddenly need it next week. You cannot just sell your house. Gold and commodities are another piece of the puzzle. They can hedge against inflation and help balance your portfolio when markets are shaky. Don't go all in gold, but adding 5 to 10% of your portfolio in commodities and gold can help you reduce your overall risk. I'm from India originally, so I got some gold from my wedding, so that is there as an investment. Now, how much of each investment you hold depends on your risk tolerance or how much volatility you can handle without losing your sleep. If you get stressed watching your portfolio dip, even if it's 5%, then it's better to be more conservative and invest less in stocks. But for most people, it's dependent on their age. So if you're young, you're better off investing more in stocks, diversified stocks, than bonds, versus when you're older, you need to shift more towards safer assets like bonds. Before we wrap up, let's talk about crypto. Personally, I don't invest in it. Even though crypto has been rising lately, it's been volatile for my comfort. And honestly, I don't fully understand it. So I would rather avoid what I cannot explain to anybody. Before we end the video, let's do a quick recap so it stays in your head. If you need money within 2 to 3 years, save it in a high yield savings account. It pays more than traditional savings do. If your goal is 10 years in advance, investing is the way to go. Real estate and commodities are great for long-term wealth, but they are not quick cash solutions. And don't forget to factor in your comfort with risk. No single investment strategy works for all, and personal finance should be somewhat personal. If you found this video helpful, don't forget to hit the like button and subscribe to my channel for more personal finance tips, and share it with someone who also is trying to figure out how to save or invest. And if you want me to break down on how to build your first investment portfolio, comment below. I can help you with that. Thank you so much for watching. I will see you in my next video. Take care. Bye.